I get asked quite regularly about whether you have to pay tax on an inheritance. The good news is no, you don't. However, what you've got to be aware of is how you receive your inheritance. If you received an inheritance and it's cash is cash, that's fine. But if you receive instead some real estate or some shares, what you find is there's no tax on that instance of inheritance. But that item you're inheriting, like a property or a share portfolio, will definitely have in it an inbuilt capital gains tax issue. In other words, if grandpa bought 100 grand's worth of shares and then you inherited those shares and they're worth $1 million, no tax on the $1 million. But if you sell those shares, then you've got to pay tax on the 900 gain. So the capital gain calculation goes back to when those shares were first purchased. There's a better option often to sell the shares or to sell the property within the estate if you're able to do that as executor, and then you pay the cash out to the beneficiary, so you take the tax within the estate. You'll find it in a good way that if you inherited $1 million portfolio with a tax bill attached to it, you only pay capital gains tax when you sell. You could probably borrow against it and buy some more investments, and that way you keep it very, very long term, and possibly that's something that you can pass on to your beneficiaries one day as well.